Assalamualaikum and hello everyone. Today we're going to discuss question on the topic Malaysian Conceptual Framework for Financial Reporting. We're going to discuss common test or midterm test exam. Midterm April 2019. This is question that relates to the topic Conceptual Framework. Okay. The framework for the preparation and presentation of financial statement includes an underlying assumption. So there are some underlying assumption for the preparation of financial statement, if you could recall, and briefly explain this assumption. So you asked to explain the underlying assumption that are stated in the conceptual framework, in the preparation of financial statement. Let's look at the answer. What are the underlying assumptions? So when you prepare financial statement, the assumption is that the business or the entity is a going concern. So the so-called going concern is the assumption. And it means that once you set the business is assumed to be in operation for the foreseeable future. For the foreseeable future means maybe you have a change of in terms of board of directors, but the business will still carry on, no matter there is a change in management. That is the assumption. And the entity is also assumed do not have any intention to liquidate or to cease its operation. So it will continue in operation for the foreseeable future. That was for 3 marks. Next. Okay, second part, part B. Part B, cost is a pervasive constraint on the information that can be provided by financial reporting. We're talking about the cost, which is regarded as the constraint to provide information for the purpose of reporting financial information. Reporting financial information, of course, is not free. It imposes costs, and it is important that those costs are justified in the context of benefits of reporting information. Describe three costs, each incurred by the providers. So costs incurred by the providers and also costs incurred by the users. So there are two categories of costs that you are asked to describe. One under the provider, another one is under the users, right, perspective. So costs incurred by providers and users of information. Number one, in terms of provider, if you provide financial information, you have the cost of collecting the information, cost of processing the information, cost of verifying the information before you can disseminate the information. So that one would be the part that relates to the provider. Provider is normally the reporting entity because they are the one that provide information of the financial status of the company, financial performance and financial position. Then number two, users, if they have got the information, they have to be able to analyze. Sometimes they don't understand, they need some financial analysis to go and analyze on behalf of them. They need to be able to interpret. If they don't understand, they might have to attend a so-called workshop to be able to have some knowledge of how to interpret financial information. And also sometimes the information are not free. They need to go and purchase the information because it's not given for free. So these are the perspective of the users. So any three of this you will get any three each, meaning to say that 6, all this should be given you 3 marks, right? 3 marks. You need to mention this, yeah, 3, 1, 2, 3. So those are 3 marks because each is given half marks. Next, applying a measurement basis. So this is part C, about a measurement basis to an asset or liability creates a measure for the asset and liability and for the related income. Yeah, so measurement for asset, for liability, income, and expenses, right? You are asked to list the measurement basis as suggested by the revised conceptual framework. Again, listing. So listing, this is similar to some other common test questions. So list is just by stating it. So historical costs, current value, and under current value, there are fair value, which is related to market price, value in use, yeah, VIU. Next one is for the liability, you have the so-called fulfillment value, and for the asset you have current costs. All right. Next, the last part of the question, halal market. Oh, this is when you have this scenario-based question, you need to be careful of the parties that are involved. So you have halal market, one party, a hypermarket located in Terengganu. The business offer high quality of halal product. So that is the goods which is halal product. The main supplier of goods to halal market is good supply. So this is the supplier or the parties that halal market bought their products from, right? And they purchase the product on credit. So when they purchase the product on credit, so good supply is your accounts payable, all right? And on 10th of March 2019, 10th of March, they ordered 3 boxes of frozen products. So on 10th of March, yeah, on 10th of March, it's just the process of ordering. You just order. So in this case, there are no such thing as like having some kind of transaction, right? No such obligation has come into force and amounted to 30,500. The goods were delivered. So it was delivered the next day. So when the goods were delivered and that reached the so-called hypermarket, the halal market berhad, maybe warehouse, were delivered the next day. So therefore, meaning to say that the economic resources are being transferred by whom? Transferred by the supplier, accounts payable, to the customer halal market. But we need to look at whose contact is the case here. Are we looking at the point of view of halal market or looking at the point of view of good supply? And halal market paid 500. So there are the amount that was charged is 3,005. So what was paid is 500. So it means that unpaid or still not being settled, right, is 3,000. And the remaining will be settled next month. Yeah, this one was settled immediately. Okay, you are required to identify the criteria as per definition of liability that are laid down in the conceptual framework. So you are required to do that. Right, required to identify that. So we need to erase this so that you can see things better. Okay, next. You're required to identify, and then the second part you are asked to explain. Identify and then asked to explain. Identify what are the criteria as per the definition for liability. See, give the criteria for definition as per the, identify the criteria. And the second one is to show whether or not there is a liability to the halal market. So halal market is the reporting entity. So halal market is the reporting entity, and goods supply is the so-called other parties, or they are the accounts payable. Right. Next. For a liability to exist, 3 criteria must be satisfied. This is directly from the notes, directly from the textbook. Number 1 is that there is an obligation. So if you look at the marks, 3 marks, you don't have to explain that much, yeah, unless you have longer marks. Maybe you need to elaborate about obligation is not a it's not simply commitment, it's a responsibility. It arises through contractual rights, it also arises through legal enforcement, yeah, and other related business practice. But here you don't have to, just talk about has an obligation. Here our obligation is to transfer economic benefits. So as a result, there is a potential to transfer economic resources because you have already agreed that I'm going to supply. So because of that, you have supplied, you also need to transfer. The obligation is the potential to transfer economic resource. So you need to go and pay, yeah, to your supplier. And the obligation is a present obligation that exists as a result of past event. So in our case here, past event is on the day the goods are being delivered by goods supply. Yeah, when you receive that, when halal market receive. So that is the date that we consider as past event. So let's look at the answer. Number 1, about obligation. There is a present obligation. Why? Because upon delivery of product, halal market is required to pay a good supply and the remaining balance. So when you are required to pay good supply, 3, how much was that? 500, right? And the remaining balance by next month. So there is an obligation. Because why? Because you have been transferred with an economic resource, which is the product. As a result, you need to give them maybe cash payment 500, and the remaining payment next month. Remaining payment next month is 3,000. Yeah, on credit. That one will be done next month. So you have not fully settled the payment. It's as a result of past event. Why? As a result of past event, because the goods ordered now has been delivered. So if it's just ordered but you do not receive the goods yet, there is no past event to halal market. But here they receive the goods that they have ordered. The third one is there is a potential to transfer economic resource from the company. So if you see, you have not yet fully settled the amount due of 3,005, and therefore when the amount 3,000 is being paid, that only will be the time that it will reduce halal market's bank balance if they pay in cash. So therefore there is a potential to transfer economic resource of 3,000. So cash is also an economic resource because they are an asset, right? So that will be transferred. It will be transferred when? Next month. Therefore, the amount owing of 3,000 to the supplier. Why? Because as a result of credit purchase, right, is a liability to halal market. So you must first state what are the criteria in the definition. What are the definition itself? Does it meet the definition? Remember, you only recognize when it meets the definition. So it's a liability because it meets all 3 elements in the definition. Okay, that's it for this second video. I'll see you when I will see you. Keep watching, keep learning. Catch me for my next video. Assalamualaikum warahmatullahi wabarakatuh.